What he has to do is just be aware of the proposed tax legislation, because a lot of this legislation is going to come in and be retroactive to the first of the year.
Retroactive.
Wow. Retroactive. So for instance, last year you could expense 100% of new machinery and equipment.
I remember that. That was a great.
Too bad I'm a consultant.
Also, you could take $500,000 in expense of used equipment in addition. Okay? This year, in 2012, the 100% is now 50%, and the $500,000 limit for used equipment is now $139,000. There's a very good chance in the next few months that is going to increase back to the 2011 levels. For 1 year only.
Wow.
So that's number one. Number two, what the Republicans are doing, and the question is whether the Republicans or the Democrats get in. That's really what it amounts to. Okay. Representative Cantor came out with a couple of fascinating proposals yesterday. Now, again, they have not been, we can't drill down yet. We really haven't seen specifically what they're proposing. But Representative Cantor was talking about a 20% tax deduction across the board for small businesses to reduce, in effect, their effective tax rate. Now, what is a small business?
What is the 500 or less employees?
Now, 500 or less employees is correct. That is the SBA definition of a small business. That represents 99.9% of American businesses, A, B, or 50% of workers. Okay? So there's an incredible number of businesses that are covered by that. So the Republicans at this point are going after trying to cultivate their platform to small business. The question, of course, gentlemen, is how this is going to be paid for when we have a deficit.
That's always the question. You don't hear tax. Reducing spending. That always comes in, but they never do it.
They never do it. Okay. Let's talk about, and that's a big Republican proposal. The Republicans really are heading after small business. The Democrats, on the other hand, have a multi-pronged attack. They're trying to sell this millionaire's tax. Now, what is the millionaire's tax? At this point, I don't know. It's a 30% tax on people that make over $1 million. Is that adjusted gross income? Is that taxable income? Is it the excess over $1 million? Who knows?
And what about capital gains? They want to raise that from 15 to 30?
Correct.
What will that do to entrepreneurs?
Well, it's going to be a real problem. Okay, so this is the Buffett rule. So if this comes in, just to make things, now again, Obama has said from the beginning he wants to simplify the tax code. Okay, so just think about what's going to happen to you gentlemen, because I know you're both very wealthy. When you do your taxes in 2012, you're going to have to figure your tax out using the regular tax rate. You're going to have to figure out your tax using the alternative minimum tax rate. And then you're going to have to figure out your tax under the Buffett rule. The higher will be the amount of tax you pay if Obama's legislation is passed.
Sounds like that.